Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the euro currency. So you can see performance stands really nice. Markets keep going from one level to another. Right now it stands near the 109.70. So the 50% level mostly is done. And yesterday we have discussed a long position taken approximately with the targets around 109.70. So right from the level that we have specified, around 108.65, which was a confluence on the hourly chart. Those of you who have watched our yesterday video should remember that. So actually it was retracement on the European Central Bank meeting, and then market has shown nice performance here to the upside. So what we could do next, first of all, we are coming to the payrolls, and here might be anything, so depending on what numbers we will get, but speaking from the technical point of view, if we take a look together at the dollar index and euro currency, we could see some difference. So for instance, on the dollar index, market mostly is completed the ABCD pattern that we have discussed, and actually your currency is trying to complete this well, but is not finished it yet, while on the dollar index it's already completed. From that standpoint, since market stands near the resistance area, I do not know whether you would like to take long positions for the payrolls report, whether you hold them that you already have, or if you're conservative enough, you probably could think about the closing at least in part of your position, because we're standing in a long trade for a few days already. So first was week started right here, the breakout of the confluence, then was a few entries that we have discussed. And if you take a look at the 4-hour time frame chart, you could see what's going on. So as we suggested, retracement will be to the neckline. It should be small after the COP. Then we have the acceleration. By the technical view, market theoretically should complete the OP target before any other retracement will start. This is first moment that we could make, conclusion that we could make from the technical picture. Second, retracement that we have here from the bullish point of view, since we have the bullish context, should not be too deep, so it should stand inside of the more stressing swing. Why? Because here was an extension to the COP. That is a reaction on the COP. It is over already. And this action is a continuation of the major CD leg and the AB continuation. So this is some kind of an extension mode. With an extension mode, we should not get any reversal swings. So it should stay somewhere inside more stress and rally and try to complete the OP. That's what theoretically should happen. What will happen in reality based on the payrolls report, I do not know. It's difficult to say. But following just purely technical moments, it means that we do not need to consider any levels below this area. It's actually for the short-term setup and with the target around the OP, we need to consider these lows as a validation point for today's session. It's around 108.65, where actually yesterday we have taken the long position right here. And on the hourly chart, we just could consider a few levels for entry, very similar to what we saw yesterday, right? So we also had single level and a confluence. And correspondingly today, you also could watch for either this level or a confluence for potential entry on the long side with the stops below this area. So that's what we have on the technical background. Now is coming, second part is a psychological moment. It stands upon to you, so whether you will comfortable or not taking position for the payrolls, what the kind of the trading you prefer. Maybe you prefer to wait and see what numbers will be. It's very personal, that's why I can't get any recommendation here. Personally, I prefer to not take the position through the payrolls or minimize the potential risk. So from that standpoint, maybe you could try to take either very small position size or just wait for a deep retracement, trying to take the position around 109. So a few options exist that we could consider. Besides, action to the upside and to the major target could happen not only because of the payrolls numbers. It might be vice versa, that because of the payrolls will just trigger this retracement. For instance, they will be a bit stronger, market expects. In this case, it could push price lower. That in turn could let us to consider taking the long position later. So we will see. But all things about the technical background we just have discussed. So context remains bullish. We do not consider any short positions by far. Following the normal logic and normal behavior on the market, it should try to complete 109.88 OP target right there. And if you would like to possess yourself, you could consider for this in this level where you could think about the position taken with the target around 109.88. That in towards what we have on euro currency. Let's see.